So, what if I told you the biggest tax cut in American history just landed? You might already be benefiting, writing off your overtime, your tips, even your brand new car's interest. Meanwhile, on the flip side, Washington is slashing Medicaid, food aid, green energy incentives, and student loan forgiveness. Massive cuts that could actually reshape communities. Sounds unbelievable, right? But before you celebrate or even panic, just ask yourself this. Have you checked the real impact on your latest paycheck? So stay with me because over the next few minutes, I'm unpacking every twist of this law. You're going to get clarity on what moved, what matters, and exactly what you need to do today. So, on a historic July 4th, 2025, Trump signed the sweeping One Big Beautiful Bill into actual law. And it's massive, merging permanent extensions of the 2017 brackets and deductions with steep cuts to federal programs. So the headline numbers are actually staggering. $4.5 trillion in tax cuts, offset by 1 to 1.2 million in safety net reductions. Medicaid, SNAP, student loans, green energy credits, all of those, well, they're on the block. Now you'll feel it first in your wallet. The familiar brackets, 37%, 22%, 12%, well, they're not going anywhere. However, analysts estimate the average family will see around $11,000 more in non taxed income a year, and wage earners could pocket up to $7,200 more. Now, this isn't hypothetical, it's free take home money. But remember, your pay stub might not have updated IRS tables quite yet. So do me a favor, compare your last pay stub if something feels a little off. Now, high tax state residents get a surprise bonus. The SALT cap is now $40,000 through 2029 for filers under, let me see, 500,000, which is 4 times the old limit. Now, that equals serious savings for homeowners, business owners, and employees paying heavy income and property taxes. But post 29, well, that advantage disappears unless Congress renews it. So do me a favor and plan accordingly. Now, here's one that people weren't expecting: substantial deductions without needing to itemize. Now, the law allows up to $25,000 in untaxed tipped income and up to $12,500 in overtime wages. Again, capacity depending on your income. Now, that's a game changer for hourly workers. And if you financed a US assembled vehicle after January 2025, well, up to $10,000 in auto loan interest could also be deductible. It's a strong incentive to buy domestically or at least claim the deduction if you already did. Now, parents and retirees will see shifts too. Child tax credits jump up to 2,500 per child through 2028 before scaling back. Seniors 65 or older now qualify for an additional standard deduction up to a massive $6,000 based on income. Now, that's a rare dual win for both households with kids and aging Americans. Small business owners as side hustlers should pay attention. The 20% QBI deduction just got permanency and the income thresholds increased. Now, that unlocks a larger chunk of your business profits to deduct. And on top of that, 100% bonus depreciation came roaring back. Everything from equipment to software, well, it can be expensed immediately. R&D write-offs are fully restated. So if you're innovating, the time to buy is right now. But here's the catch, and there's always a catch. The cost cut to fund all of this generosity is going to hit hard. Medicaid, well, that faces around $930 billion in reduction. SNAP loses about $186 billion. And strict new work requirements, 80 hours monthly, are imposed for able bodied adults under the age of 65. Now, estimates from the CBO and advocacy groups warn that 10 to 12 million people may actually lose coverage by 2034. Rural hospitals are already expressing concern. Some warn that closures could be imminent. Now, do me a favor and consider the bigger picture. The CBO has projected this bill will add 2.4 to 2.8 trillion dollars to the federal deficit over the next decade. A Moody downgrade is already in the headlines, unfortunately, and higher debt means higher interest payments, which increases tax pressure further down the road. Now, investors are jittery and inflation could get a boost. But the question is, will this fuel economic growth? Well, maybe short term, but long term, it very well may create drag. Now, on energy and environment, green credits were totally rolled back. EV buyers will lose federal tax incentives. Solar and wind developers lose investment support. Now, keep in mind, retailers, homeowners, renters, they're likely to see utility bills creep up as new clean energy projects get shelved. Meanwhile, billions are shifted to military and border funding. ICE budgets skyrocket, funding for drones, missile defense, and of course, border walls skyrocket. Now, it's a major ideological pivot funded through your taxes and withdrawals. And don't overlook the new Trump accounts. Everyone with children can open accounts where $1,000 is deposited per child, with up to $5,000 deposited annually. The earnings will grow tax free, but to be frank, it's more political symbolism than an economic catalyst given the broader context. So the big question is, what should you do today? Well, start with the pay stubs. Check W4 settings and compare them to last month. If your withholding dropped too much, adjust it now. It's better to owe a little than to face big surprises. Also, gather documentation. Things like tip statements, auto loan interest records, and overtime documents. Parents, adjust child credit calculations. Seniors, update your standard deduction claims. Business owners, well, you need to meet with your tax advisor this week. You should consider timing equipment purchases and setting up or even restructuring pass-through entities to claim higher deductions. And look into R&D projects and get ready to write off these costs this year. Now, if your household receives Medicaid or SNAP, talk to a benefit counselor now. Work requirements and income verifications are rolling out fast. So planning now can prevent abrupt disqualifications. Now, this isn't simply a tax cut, it's an economic jolt, a policy realignment, and a budget gamble. Now, you may walk away with thousands more, but of course, there's a ripple effect. Weaken public services, inflation pressure, and future debt burden. So the bottom line, know your numbers. Track your changes, document your moves, and plan ahead. So I want to hear from you guys. Did your paycheck go up yet? I'm curious. Have you claimed those tip or auto interest deductions? Parents or retirees? What's changed at tax time? And business owners, what investments are on your radar right now in view of these tax proposals? Now, if you want me to walk through any of these line items, tip deduction, QBI optimization, Medicaid eligibility, well, just say the word because I'm ready. Now, if you're finding these videos informative, welcome to the Financial Freedom Network, where we cut through the noise to give you clarity on making your money work harder. So smash that like button and subscribe right now. In every video, you get tools to keep more cash, boost your credit, and stay ahead. This one's huge, it's loud, and I promise you it matters. So as always, thanks for watching, stay sharp, stay free, and I'll see you guys on the next